Hello everyone and welcome to the Dashcast, where we go about trying to find the most interesting people in the world of cryptocurrencies, finance, and business. On this episode of the Dashcast, I was fortunate enough to have a good amount of time to sit down with Tone Vays, a well-known and experienced trader in the cryptocurrency space. Coming from a background in traditional finance, Tone has taken a lot of his skills and techniques into cryptocurrency markets and has made himself wildly successful. And throughout this episode, we're going to be talking about a variety of things, such as the short-term and long-term outlook of Bitcoin, as well as a variety of different indicators and topics that Tone's keeping his eye on at the moment. Our sponsor for this episode is the Dash Report. For those of you out there who enjoy what I do by covering multiple markets and getting a macro perspective on all the opportunities available, I feel you'll really like the Dash Report. Again, it's a great way to support the channel, but it's also a great way to get a good, clean perspective on a variety of markets, from crypto to stocks to commodities and currency markets, which I usually don't cover on the channel. So if you guys are interested, there will be a discount code linked down below for $129 for an annual subscription. I highly recommend you give it a chance and would love to get your feedback on the newsletter. What's going on, everyone? My name is Nicholas Merton here at DataDash, and here on the Dashcast today, I'm very fortunate to have someone who I've gotten to personally meet back in March of this year at Hong Kong Blockchain Week, and that is Tone Vays. Tone is a skilled trader in not only the crypto space, but also comes from a background in traditional markets, working at a variety of top-tier firms on Wall Street. So, Tone, thank you very much for coming on, man. I appreciate you making the time, and how have things been since we talked last in March at Hong Kong Blockchain Week, man?
Pretty good, man. I mean, I was busy. I continued to travel for like another month and a half or so after that. And I was traveling for like a month and a half before that. So it was, Hong Kong is like the one place where you can actually, like, I know you can party anywhere, but in my world travels, there's nothing like Hong Kong. Like I remember, here's what I remember, right? It was usually like, hey, if you're going to be on a 12 or a 13-hour flight, you really want business class. My flight from Hong Kong to Switzerland was like 12 hours or so, 12 hours plus. Thank God I didn't pay for business class, because I slept for 11 of those 12 hours. And it really didn't matter where I was. It could have been like on the floor of that plane. Like, it would have been absolutely.
You just would have been out as a rock, like, no matter what.
Yeah, I just like passed out. There was like, and I think I was still sleep deprived when I landed.
Yeah.
But hey, thanks for having me on DataDash, man. It's first time actually on your channel.
Yeah, absolutely. Yeah, I mean, it was great. We spoke in a panel, I think, as far back as February, and I think it was a smaller one we did it. This was in Singapore. This is actually the first conference I went to in crypto. But I think we really got to talk and stuff. I appreciate you actually made the time to hear out what I was doing with Project Genesis and everything when we met and everyone with Kyle and all the guys who were at the conference there. But yeah, no, I'm very.
Oh, that was Hong Kong.
Yeah, in Hong Kong. Yeah.
Yeah. You said, I think you said Singapore. That was the Hong Kong one.
That was actually, well, we actually met a long time ago. I think I brought it up and stuff back all the way in February of 2018. We actually spoke.
Oh, was that like the La Token event?
Yeah, the La Token event, exactly. It was a long time ago. Yeah, it's almost a blur with how many conferences there've been over the last year and a half. But yeah, I mean, it's been a wild world of change, man, ever since then. And I'm really interested to pick your brain because, I mean, obviously you've been in traditional markets like myself. I used to train traditional markets, and seeing where crypto's evolving to right now, there's a lot of things I want to talk about because I think things have been tipping really in your favor as of recent, man. You're one of the top Bitcoin maximalists I know personally, and I really actually admire Bitcoin maximalism in a lot of ways because, I mean, we're seeing right now not only are a lot of the fundamental developments being done in the Bitcoin ecosystem, but also along with that, you can see market dominance has been steadily rising. Everyone, including myself, actually thought we'd break on the 50% mark for market dominance. So we've actually just been rallying up ever since then. So I'd love to get your take on it, man. Where do you think kind of like crypto markets are going over the next few weeks or months?
Oh boy, I really think Bitcoin should be topping in this vicinity. I mean, these things always take longer than they expect. Like when prices start to crash, they fall further. But time, people always underestimate time. People underestimate how bad things can get. And I know why that is. Because the reason why prices flash crash is not because there was a fat finger. It's not because, I mean, like a real flash crash, right?
Yeah.
It's not because of a fat finger. It's not because of a short seller. The reason why prices crash is because bulls pull their bids. And when bulls pull their bids off the order book, there's no bid. And if there's no bid and you're panicking, it just free falls.
It just causes massive slippage.
Right.
Yeah.
So That's what happened in when we fell from 6,000 to 3,000 in Bitcoin in a matter of like what, 3 or 4 days. That's exactly what happened. That's what happened in the stock market when we finally fell from like 1,000 points down to 600. That was back in late 2008 when we bottomed in March 2009. That's how it always pretty much happens on the way down. Now, what happens in time-wise outside the stock market has a way of just keep going up, and that's because no one believes in the stock market, like especially in our industry, right? But what happens with time is people always underestimate time, and I also underestimate time sometimes. Like I really expected that fall from 6,000 down to that $3,000 area earlier. It just kept dragging and dragging and dragging, and I had to deal for months, like for 6 months, one 5,000 tone, and then eventually when it hit 5,000, it just like boom, blew right through it and down to 4,000. Now, if I had my bearish trade on, we're not going to talk about why it wasn't on. It was due to forces outside of my control. If I had my bearish trade on, I would have taken some profit at 4,000, but I would have kept riding it down to 3, and I'm sure I would have had my stop loss hit, on the way up from 3.1 up to 3.5. But because I didn't have the stop loss and we fell so quickly from 6 to 4, I was one of the first people to actually go bullish. Like, and this is the crazy environment, right? People still make fun of me for being the biggest bear. I was one of the first people to go bullish at 4.1, 4.2, and I took kind of bullish position. And then over the next few days, we fell down to 3.1. Then we bounced to 3.8. Then we fell to 3.2. So I was stuck in this bullish position because I got in a little bit early. But the reason I got in early is because I wasn't profiting from the fall. And if you're a trader, you know that if you're profiting from a trade, you have no reason to take on the counter trade as long as that trade remains profitable.
Right.
But if you think that it's toppy and you're just trying to squeeze out the last profits, but if you don't have those profits to squeeze out, now you're looking to enter the opposite trade. And that's what I did. So that trade took forever to develop from like November when we first touched to 4.1. And then eventually when we broke out to 5,000 in when, like April or something.
Mm-hmm. April 2nd and 3rd,
so,
yeah.
So now it's the opposite situation. And the opposite situation is if you are in your bullish trades, you want to squeeze them out as much as possible because I thought that 5.1 would be kind of like the top of this rally. Just like I thought 4,000 is a decent bottom of the last rally. Mm-hmm. But now we're creeping up towards 6K. So now, if you have your bullish position, sure, just like, keep your stop loss in check, try to ride it out. Maybe it'll go to 5.9, maybe it'll go to 6, maybe it'll go to 6.1, 6.2. But I think this is still a dead cat bounce. It's a big dead cat bounce. It's a strong dead cat bounce. But I'm still expecting prices to go lower. So because I already took all my profits from those bullish positions, and I tried shorting. I tried to short Bitcoin at 5.4. That trade failed, but was profitable. I went long again, and I've already closed that trade as well. So now, since I don't have any more profits to squeeze out, what I am looking to do is actually sell a few Bitcoins to prepay my bills for the rest of the year. So that's kind of my plan right now because I just don't trust it. I will take the hedge. I will prepay my bills. I don't have that many bills. But I'll prepay my life.
Not partying too much, right? Not partying too much.
Oh, we got a huddle, man. I mean, like I'm living like I'm back in college these days. I'm like, so right now I am potentially looking to go short. I'm looking to sell some Bitcoin. I'm looking to exit what I can right here in the $6,000 vicinity. And there'll be a lot of people at Consensus, so it'll be, plenty of connections there. So it'll be great to cash out a little bit. That's my plan because I think we're going lower. Now, are we going to go sub 3,000? I don't know, and no one else really does either. We had this big debate on my channel whether the bottom is in. Great reasoning on both sides. What I do know is that we're going to pull back. I have like 95% confidence that we're going to pull back. Are we going to pull back to 5, to 4, to 3.5? Or are we still gonna see lower lows? My answer is it doesn't matter right now. The point is for me personally, to get a good exit in the $6,000 vicinity and try to profit from the pullback. And if the pullback keeps going lower and gives us new lows, I'm going to be right because I still think we're more likely to go to new lows. So that's going to be great for like business, obviously, for the YouTube business, for everything else. But even if I'm wrong on the fact that we go lower, I want to make money from this trade because I think I have a lot of confidence that we are going to pull back from 6 to approximately 4. But we can go, but there's a high chance to go lower. So that's kind of my outlook on the market over the basically through into the summer.
Yeah, I shared a pretty similar view in the sense of where I see Bitcoin going. I've been calling for it to basically go in this channel. After we saw the second top, I pictured this would just keep repeating the zigzag pattern until we got up to 6K, and we'll probably have 1 or 2 tests. But I mean, it's such strong resistance now due to the fact that it was a yearly support in this case through the end of 2017 and most of 2018. And the thing I always bring up to people that at least what I see possibly happening is similar to how we had about 3 times, I think it was about 3 times we hit resistance at 4,200 until we had the breakout. I think we're actually going to come back down and make that support. So we're going to turn 4,200, which is, it's a nice even number. It's not exactly 4,000, but somewhere around that range until we line up with the 2 previous lows we had on Bitcoin, one around 3,100. I think the other one's at like 3,400. I can't remember the exact number, but I have a blue line that's indicated on my chart setting up right towards the end of August to September, setting in a 3rd final high low and possibly reaching up. But either way, Tone, as you're mentioning, it could go down lower. The fact of the matter is in the short term, the play right now is to realize like you need to squeeze those final profits, have your stops ready. You don't want to miss out on locking in what's happened over the past few months, because if you've been long this market, you know, as a swing trader, and you know, you've been following down and down and down, this helped us recoup a master sell-off that was back just a few months ago. So, I mean, you don't get that opportunity all the time for it to recover so quickly.
Yeah, no, and that's what you just said is very, very reasonable. And that $6,200 resistance is massive. I mean, 9 months it was supporting the price, so that's 9 months of resistance buildup. And the 4,200, again, like you said, it pulled, it held like 2 or 3 times. So that's also very, very strong support. And that is also why I felt that once we broke that 4,200, we would go to 6. That was 5 or 6. I was very, very confident in that. Just as I am confident that the $6,000 to $6,300 area is going to reject the price. Because a lot of people that missed, that were on the wrong side of that trade at 6,000, and I wasn't on the wrong side of the trade. I was on the right side of the trade, but due to forces outside of my control, I got stuck in my Bitcoin positions. So I am happy to have another chance to sell in that area. Yeah. And I'm going to do it.
That's good. Well, I mean, I'm interested. So, you know, we've talked about these things, like, and to put it in summary, I guess more in a fundamental aspect, still keeping a trader mindset. I think right now there's much more demand on the, like, for when we're talking about institutional buyers and sellers. From the gist that I've gotten from most OTC professionals, right now the buy side is far outweighing the sell side for Bitcoin, and that's why you're seeing some of the slippage on exchanges where you saw the rally from 4,200 to to the $5,100 range. But I also don't think we're fundamentally ready for that rally just yet, as you mentioned. I think it's something where this summer or sometime going into early 2020, that's when we can expect it. But I'm curious to, like, I mean, for Bitcoin itself, what do you think could be the thing that actually carries markets forward going into 2020 and possibly sparking the next rally? And for the larger macro picture, I don't mean to ask too much at once, but I mean, what do you think is your next big, like, price target for the cycle in that case? Do you have anything in that and that you've kind of estimated out?
I'm trying not to have upper targets because I haven't been convinced that the bull market has started, right? So I don't know when the bull market's going to start. So it's really hard to have these price targets because time is just as important, and I need the time element of things. And until the bull market starts, it's impossible for me to do. I'll tell people on your channel that, like, my key date, I should pull up my own chart, just so I know that the next key date that I'm looking at is October 5th. 2019. I don't know what's going to happen on that date, but that's my date because I'm a time guy. It's something that really helped me a lot in my trading. I was following Martin Armstrong's work for probably 5 years prior to even starting my YouTube channel and coming into crypto. Probably been reading him since like 2012 or something like that. Haven't read him in years. Haven't attended his seminars in years. So my next key date is going to be the 5th of October. I don't know what's going to happen, but that's one of my key dates. Could be the final low. Could be a massive bull trap swing high. Could be a news event, like a political event. I will tell you that my last key date corresponded to the week of SegWit getting activated. And my key date prior to that corresponded to the week of the Greek banking shutdown. I mean, these dates don't happen all the time. And I have these dates, plotted out for like the next 10 years. And they come about like once every 2 years, 2 and change. But and some are more critical than others. I said back in an article in 2014, in August of 2014, I said that the key date of August 11, 2017 will be the most important day in Bitcoin's history. And I said that 3 years earlier, and that corresponded to like, I think 48 hours to SegWit getting into the system.
Wow.
So that was probably one of the craziest coincidences maybe that I've done in this space. So those are my key dates, October 5th, 2019, and then November 29th, 2021. And then November 29th, 2021, that's the weird one because it's more critical than the October 5th. And it's like 6 months before the halving. So it's kind of like in the middle of nowhere. I know so I'm not sure what to think about that date. I'm sorry, my bad. That's 2021. Sorry about that. The October 5th is coming in like 6 months before the halving. Okay. The 2021 is really in the middle of nowhere because nothing, like we don't have anything on the horizon then. So I have no idea what's going to happen. Maybe that will correspond to the next all-time high. Now, I think the next all-time high is going to be smaller. I really don't think there's going to be another 20x run up like we had. I mean, once we broke the last high at 1,000, let's use round numbers, from 1,000 to 20, we went up 20x. And I don't think that's going to happen again. I think the best we can hope for is 5 to 10x and probably closer to 5. And to be honest with you, I would think that if Bitcoin is pushing $45,000, $48,000 a coin, I might be cashing some out because like once your market cap gets bigger, it is so hard to move that price. And that's because of market cap. Like Apple stock split. Like Apple stock would be like a $2,000, $3,000 stock if they didn't split when they were at 700. But like Apple stock is like what, $200 right now. And it's hard to move that stock because the market cap is so freaking big. So when Bitcoin starts to get that big market cap, like don't expect it to move all that much because not that many people are going to come in with millions. And for the last, actually, my whole career here, I've been challenging this concept that Wall Street is getting in, Wall Street is getting in. I mean, again, I know I kind of use Novogratz as a punching bag sometimes, even though he's not a bad guy. But like even he is like defending like the Bitfinex and the Tether position. I mean, if I ran a hedge fund with real money, like I would see this space as a joke. I'm like, I'm managing hundreds of millions of dollars. My clients are expecting me to know what I'm doing. And God forbid I was using Bitfinex. Like that could be the end of my business. Right. That could be the end of my fund. That could be the end of like the 100 employees that work for me, most of whom making like $200,000-$300,000 a year, many of them making millions a year. Like, why do you want to jeopardize a business that is, like, why do you want to jeopardize 100 of your friends that are working for you, making hundreds of thousands of dollars? They have families. You're responsible for them. You're going to gamble all that on the unregulated crypto space? I think this is crazy.
Yeah, that's one thing I wanted to talk to you, Tony. I mean, we're talking about some. First off, I want to ask you a little bit more about the dates you mentioned. I'm curious as to how you go about finding and determining those dates. But another thing that I'm curious about as well is if we are looking for Bitcoin to go to say around that target range of like 40 something, 50,000, and not getting the 20x like we had last time, completely understandable. What would be the catalyst for that, at least from what you can assess right now? Is there anything that you think, if it's not institutions coming in with an ETF or backed being as glamorized as it really, has been pushed up to be, what do you think that might be? But I'm curious on the dates. That's what I want to know. Like, how do you determine those dates?
Actually, I have an article. I have an article that even shows you like the code. It's actually not that hard. I just use like Martin Armstrong's Pi model 101. Basically, you just use a circle. You use pi 3.14, and you convert that into days and years, and you have a cycle. You have a cycle that applies to all financial assets, to a lot of things, and it's the number pi. Did you ever see the movie Pi? Way before your time.
Oh, I might have not seen the movie, no, but I do know about Pi.
You watch the movie Pi.
Yeah.
Well, I watched the movie Pi. It's one of the classics. It's one of the classic independent indie films. And in that movie, this is an old movie, and in that movie, they also used like the number pi to predict the future of financial markets. And that's what Martin Armstrong does with his economic model, which is great. I just use the basics of it. Pi in years is 8.61 years. So that's your like birthday. So you have a birthday of 8.61 years, and then every multiple of that is critical. The bigger the multiple, the more critical the date. So the 8.61 year birthday from the Genesis block happened to be the week of SegWit's integration. And you divide that by 2, you get the half cycle. You divide that by 4, you get the quarter cycles. And so that's kind of how you do it until you get a multiple of 10. So like the 86.10 years after Genesis block is going to be very, very critical. A 10-year multiple of that date. And I pay attention to these dates. I find it very fascinating. I find it very interesting. And I'm really curious what the next set of dates brings. So that answers that question. And if you Google Intro to Time, Tone Vays, you'll find that article, one on Liberty Life Trail that I wrote like a month or two before SegWit, and the original one from Cointelegraph that I wrote back in 2014.
Interesting stuff, man. Yeah, I'm definitely interested to look more into it. I'll put the link to it in the description stuff so people can read into it.
Yeah, I can send them to you if you're having trouble finding them. And the other question, the catalyst. I think the catalyst is going to be the death of altcoins. And I do see the Bitcoin dominance is creeping up right now. I actually went and took a look because what I was curious about is other assets, right? And this is good because I made Ripple really frustrates me because it's not a cryptocurrency, right? Like it should not be on this list. But like we all agree that Ripple is nonsense, right? Like it's not a crypto. They just pre-print it. Yeah.
I'll say to think that you're going to convince, I think, the vast majority of banking institutions, and you probably know this, Tone, coming from the traditional sector, to buy up a digital token called XRP and to use that in order to transfer value, when JP Morgan can literally go out and create the exact same thing and not have to pay a dime. I just honestly don't see that being the case. Like
see, I'm on the opposite. I'm on the opposite side of that. I'm actually on the opposite side of what you said, because of course they would. XRP is a centralized coin. They control everything. They have 66% of the supply. No one has to pay for it. They can just give it away to pump up the rest of the coins that the fools are buying on decentralized exchanges. Like, there's no reason for JP Morgan to create a coin. They can just call Ripple and say, give us 1,000 XRP, and they'll say, how soon do you want them?
It's like it's right? That's interesting, man. I didn't think about it that way. I mean, I could see it in that case as well. I mean, so long as I think obviously they just want, just like central banks, they want basically probably one of the consensus nodes in there. But I mean, it's all permission in that case. Like
right, exactly. Like it's a totally centralized coin. They're holding all of it. They can give it away anytime they like. And they profit from, stupid people buying into it and pumping the price. But anyway, so my view is this, like I'm looking at it now, and this is interesting. Bitcoin is at 55% dominance right now, but it's the section called Other that is 20%. And that wasn't always the case. Like things that are in number 2, number 3. I mean, there's been times where Bitcoin's at number 1, like Ethereum's at number 2, Litecoin's at number 3, Ripple's at number 4, and then other comes in at like, number 6 or 7. But right now, other is 20%. And I said this a while ago when we were making this argument, and people are like, well, Tone, you're crazy. All of these altcoins are going to go to zero. And I'm like, yeah, you're probably right. They're not going to go to zero, but they're going to become less and less relevant over time. And what's going to happen is, like right now, there are only 2 coins that are greater than 10% of Bitcoin's market cap. Okay, and those are Litecoin, Ethereum, and Ripple. And we know Ripple is nonsense. It's not a blockchain. It's pre-mined, all 100 billion of them, and they're holding 62% of them, right? So that means that everything else is less than 3%. And this was my argument. My argument was that Bitcoin will separate from the rest. And I said that in about 2 to 3 years, there will be no other coin, a reasonable coin, not like I printed 1 trillion and I sold you one for $1, right? Like a reasonable coin that has greater than 3% of Bitcoin's market cap. So even though all of them combined, like the other section can still can creep up to 30, 40, 50, hell, the other section could be at 90% and Bitcoin at 9. My point is that there will be no coin greater than 3% of Bitcoin's market cap. And that is going to decrease. So Bitcoin will separate from every single coin, even though the number of coins could be infinite, them in total could be big, but each coin individually is going to become irrelevant. Yeah. And I think that's going to be the next driver of the next bubble, but the bubble after that is going to be the adoption bubble. Adoption and possibly Wall Street at the same time. That's going to be the massive one because I don't think adoption is coming in the next cycle. I think it'll help. People will use it more, but and I don't think Wall Street is coming this soon. God knows when the ETF's going to be. God knows when BAC's going to be. I think there is a higher probability that the SEC and the CFTC dropped a hammer on these exchanges. Like what they just did to Bitfinex, they can literally do it to 80% of all of Bitcoin's current liquidity in a weekend. They can just, I know BitMax isn't price discovery, so they're different. But I know they're the most liquid exchange, and I know they have the best lawyers in the world, but they're still U.S. citizens, and that's still, a factor. The U.S. government can show up. They can. No one uses Gemini. Very low liquidity. They'll leave them alone. They're in line with regulation. Binance, they can show up and shut that down. Any unregulated exchange, any exchange that doesn't do more KYC on you than your FX broker did back when you were trading there, right? So any exchange that doesn't do additional KYC besides what you had to go through a regulated exchange, because on a regulated exchange, you can't even use that money for illicit purpose. So the Bitcoin exchanges have to go beyond what the current KYC process is in order to not to be worried about getting shut down. And I think if the US and the EU government really wanted to, they can just, I don't think it's important enough for them, but if they really wanted to, they can crush Bitcoin liquidity. They can just take down 80 to 90% of all of Bitcoin's liquidity in a weekend. And I think that is more likely to happen than Wall Street getting in. But after that happens, it's like Wall Street using the arm of the government to get rid of all of these companies so that they can launch back, so that they can launch the Fidelity trading system, just so they can launch their own systems that are going to be, signed and approved before that happens. And I think that kind of cleansing could be, is A, scaring current financial players from getting in, and B, could cause havoc on the price. And when there's havoc on the price, there's havoc in there's havoc in the mining industry. There's havoc in people panicking. Your family starts calling you an idiot again, and like all all of that builds up on itself, you know?
Yeah, I mean, to build on what you said, Tone, because it covers a wide range of things. I've talked about how a lot of people compare the dot-com bubble to what happened back in say what happened back in December of 2017, the peak of the bull run. Altcoins were, going to all-time highs. It has the ridiculous nature of the dot-com bubble, but I always mention to people we're at less than 1% of global adoption of cryptocurrencies. So we even haven't had really our dot-com bubble yet. We're such an early market. What's really going to lead us to that? I'll be honest, I don't think we're at the point where we can go all the way to 7% like we had in the internet in the late 1990s. I think we need something that's going to work as a filtering mechanism. And as you mentioned, you can print as many altcoins as you want, but I just see the trend of IEOs, for example. Boy, I bet you could rant on that, man. But I've been looking at IEOs and I'm just I see exactly what Binance is doing. The BNB token is basically trying to extract the same value that Ethereum had during the ICO craze. They've got the liquidity, they've got the platform, and now that they're in Malta and they just keep moving wherever it's convenient, they're just going to prop up as many crappy projects as they can, and they're going to have the same repetitive pattern of dropping like every single token does. And it's basically a game of institutional players in the crypto space getting in early and then dumping it on retail investors. And it's so sad. It's why I don't talk about IEOs on the channel. I don't even give it publicity. The only one I gave some publicity to is I was laughing at the Bitfinex $1 billion IEO that they're planning. So we'll see how that goes.
No, it's amazing. Like we've had exchanges, since Amsterdam and the Dutch of 1400s.
I just went
and
there
somehow
recently. Sorry,
You're there?
Yeah, I recently went to Amsterdam and I had a really nice girl show me around. Yeah. Sorry about that. Go on.
Yeah, there's not much trading goes on there. There's a couple of crypto companies that have offices there. If you stay there for a while, you can rent the desk over at the stock exchange. And somehow for the last 600 years, exchanges managed to do operations without a token. And yet here in 2020, somehow you need some useless internal token to function. It's ridiculous. The whole notion of just call it what it is, a security. That's exactly what it is. It's a security. And if you didn't follow the laws and regulations on securities, I think you should be in trouble for that. We have laws for that. We have security laws for that. I actually don't have a problem with security laws. I had a problem with security laws when I was working on Wall Street, and I had all these trading restrictions that really pissed me off. But in hindsight, I now know why those trade restrictions were there. Now, in my reality is I'm not going to go searching the JP Morgan or the Bear Stearns database for this insider information, but I could have, I had access to certain things. So that's why I had all of these trading restrictions where I had to call the HR and tell them what trade I'm going to make. And they have to look and approve it. And then I can't even get out of that trade for 30 days unless I'm down more than 20%. Then they say, fine, then you're an idiot. You can get out early. So those were the restrictions. And I understand what they are. We have all of these financial laws. They're there for a reason. And you may disagree with that reason. So you have to go and try to change the laws. And all of these things, call them what they are securities. And on top of that, you're launching your security on an insecure security, like Ethereum. And I want this thing to end before it's a catastrophic bubble. Now, the dot-com bubble wasn't catastrophic. It was just, dumb companies went away. There wasn't any underlying disasters in the technology space when the dot-com bubble burst. But this time it's different, right? This is more like the housing bubble. The housing bubble was a bad bubble. I know everyone hates the fact that the government bailed out the banks. But if the government didn't bail out the banks, every single business around you would have failed. If your family has a little business, a little bodega down the street, and all of a sudden their bank account doesn't work, what do you think happens to their business? Right? So everything could have collapsed. And if you build all of this shit on top of Ethereum, and then Ethereum collapses, what do you do? Yeah. And EOS is no different. Tron is no different. They're all the same. Cardano is no different. They're all centralized, insecure platforms, and it would be way more efficient on a database. And eventually they'll figure all that out.
Interesting stuff, man. Well, Tone, I think we've covered a good range of topics here, man. And I'm curious, with what you've been doing with your channel, you've obviously got your own website. I think you do a training course, or basically an education course for traders. I'm curious, like, what's your kind of next step over the next year or two? Like, what's going to be your major focus for yourself and also in the broader sense of crypto going into, say, 2020?
Oh man, like I'm doing too much. So I started doing the conferences, and there were 2 conferences. They were both hugely successful. Unconfiscatable and Understanding Bitcoin. I mean, my definition of success is different than others. I know we're both will probably be at consensus, and they're expecting like 10,000 people. I don't want to deal with 10,000 people. Yeah. Like I was trying to sell 300 tickets for Unconfiscatable. I think I sold about 150. We were trying to sell about 220 for Understanding Bitcoin. I think we sold about maybe 120, 130, something like that. So we went like almost 50% under on ticket sales, but the conferences were managed well. The speakers were awesome. The content was awesome. And it was the feedback. It was just the feedback from people. Like I know we're all gonna get back from consensus, and we're all just gonna talk shit on our channels about like the insanity that went on there. But after those conferences, everyone was happy, and everyone's coming back. I mean, for me, it's all about retention. So I think the conference scene, I want to do maybe for a year, focused on slightly different areas. I'm starting to walk away from the in-person workshops a little bit. Maybe it also has to do with the bear market. Maybe I've saturated the space. Trying to move on to webinars. I think they're more convenient for me. They're more convenient for other people. Make them a little more focused instead of like a really long and grueling 7 hours in person. It's going to be more like maybe 3 to 4 hours. And then when you dive deeper into a topic, and this way I'll have a library of videos of trading education, like 3-hour videos, have like 40 of them. And then you can sell that on your website. Hey, pay into a QR code, watch a video on the RSI, watch a video on the MACD, and they're really in depth with sample trading right in there. So things like that. So those are my current focuses. Also, I'm the guy that introduced the sequential trading system to the world of crypto.
Oh, TD Sequential. Yeah.
So the TD Sequential. So that's been like my most popular product, and teaching people how to trade it. And the way I learned it is I was actually signed up for a trading desk's notification service, and that's actually how I learned it. Like every day, I would get like 3 to 5 emails from all the interesting assets in the world that were hitting a critical 9 or a critical 13 in the sequential, with some commentary on how to interpret that particular 9. So I'm looking to, and I have a lot of people, looks like there's demand for this. I want to start one of these notification services because I realize that my business model doesn't scale. My business model is give away, my views for free, but my knowledge of trading, that's what you have to pay for. But I've always just been one-time fee. You pay me a one-time fee, and then you get this, and then you have this access for life. And then you realize, hey, you have so many people with life access. Every day someone needs help with something. And it's already getting to a point where I need a bunch of assistants handling client support. And that doesn't scale long-term for one-time lifetime fee. It just doesn't. So there, as much as I avoided a subscription model my whole life, I'm trying to find the least scammy way to do it. So I think the sequential notification service, maybe access to all of the videos. So something like that is another focus. I want to bring back CryptoScam. I own CryptoScam.com, and I want to bring that back. I want to, explore the project, thinking about, hey, I want to design. CryptoScam.com currently reconnects to my website. I'm like, man, you know what? I need like a WikiLeaks for the scammy projects in crypto. Someone to go through all of the leaks about the scams in the space. And when enough builds up on a certain project, and then I just do a video presenting all of that information. So these are like all of the things that I'm thinking about as far as scaling, what to do next. I'm still speaking at conferences. But the YouTube channel is picking up more views, And like, I've always been like, I've never charged a speaking fee, maybe like once or twice, and it was tiny. But it's getting to a point where I'm just choosing my speaking engagements based on where I want to be. And, when friends ask me to speak there. But that's another way. I mean, once the YouTube channel is pulling in 50, 60,000 views per episode, it's time to capitalize on that. And it's, speaking at bigger venues. I'm already trying to speak I spoke at Talentland, 30,000 people.
Wow.
I was like one of 2 or 3 English speakers. Unfortunately, it's all in Spanish, but that conference might expand to English-speaking nations. I'm looking more at economic events, non-Bitcoin events. It's great
we gotta
speaking
get
to
outside of our own bubble. We're always in a bubble in crypto sometimes, and it gets repetitive too. That's the one thing we need to get out and talk to people.
Look, I can talk about all king, and let's not even discuss that my after blockchain plans of going into health and nutrition, which will happen eventually. I will pivot. It's just that I think there's more work to be done here before I move on. But yeah, there's like 100 things, and I wish I could do them all, but it's impossible.
Yeah, well, speaking of other things, man, one last thing I want to ask you, Tone, because you and I both we have a passion, I guess, outside of crypto as well for traditional markets and at least understanding different types of sectors and playing cycles. I'm curious what you're interested in right now outside of crypto, because we talk a little bit about traditional equities and commodities as well. Is there anything else that's capturing your eye outside of that? Because I know on your episodes, I get to watch from time to time. I'm quite busy usually, but I know you cover, the S&P 500, some of the major indices. What markets right now are kind of capturing your eye as something you're bullish on?
The equity markets. The equity markets have always been capturing my eye over the last 5 years. It's just this resilience. The Trump election was absolutely huge. I remember, it was funny, like Tyler was telling me, that's how I got on Tyler's radar, Tyler Jenks, because he's a traditional market trader. And he said what captured him was my Trump election analysis of the markets, where I used to, I don't have much hair to pull out now, but I still had some hair back then. And I used to pull my hair out every time Trump would lead in the polls and markets would dip. And then Hillary would lead in the polls and markets would rise. And I'm like, this is like bizarro world of Seinfeld. Trump is a capitalist. Hillary's a socialist. Capitalists are good for the private sector. Socialists are bad for the private sector. It was all complete bullshit. The night Trump gets elected, markets crash 1,000 points in the futures markets overnight.
They rise right back up.
By the first end of the trading day, the markets are back to where they were. And I'm like, this is complete and utter bullshit. And the moment Trump got elected, the markets just skyrocketed. And I think that Trump will get reelected, potentially with the greatest margin of victory in history. But that's what I'm expecting this time around. And I think the markets are just going to go up and up and up. And the dollar, I think, is also going to go up as the dollar, like they can't print the US dollar fast enough. And all the other currencies are going to go down. I think the euro will fall below parity to the dollar. I think that's interesting. Really looking forward to the robotics boom. I'm still waiting for my self-driving car. Still waiting for all the self-driving trucks. And I think that's going to be huge. And I think that's going to be the next. Boom. And it'll be interesting if the robotics and the AI boom. I don't really necessarily believe in like robotic consciousness, but I do believe that good programmers can write good AI, so that machines can kind of do everything that they need to do without human interference. And those machines might want the currency that is, stable technologically. Not at the whims of the economy. So I think that's another avenue for Bitcoin to take off, because if you have a self-driving car and that self-driving car wants to literally be a self-driving car and earn its own money without the owner, what currency is it going to accept? Because the car can't have a bank account, but the car can hold Bitcoin internally. It can figure out how to accept it and how to spend it. And how to validate.
I'm currently lobbying right now with a few guys to make sure cars have the right to a bank account. So don't hold out on that for too long now. Just kidding. But no, it's interesting, man. I agree with you. Thinking back on the election, I remember watching right when I think he had won Florida. I remember just watching the futures just depleting down. I was like, oh my God, like the election's flipping. And the one thing that was interesting, what was happening there, as you mentioned, it dropped like hundreds of points and then basically reversed back by the next open in the morning. And what I learned from that, actually, from someone who I know who does a little bit, it was traditional and institutional trader, had basically stated that was basically people readjusting portfolio positions for the first initial day, because if everyone was betting Hillary would win, and for that, you have different sets of stocks who would do good under a Trump economy versus a Hillary economy.
Interesting.
Yeah, but no, I agree with you. I mean, with the tax cuts coming through, I always press to people, because I'm mostly a macro trader myself, how many macro factors have changed over the last few years. They get so underreported on. The tax changes, deregulation, all those things have huge ramifications for capital inflows and outflows of different economies, for repatriation of funds back to the U.S. So I mean, it's exciting, man. It really has been leading equities to lasting. I think honestly, in 2016, you probably would have had the start of a pullback, but that literally came in to save the market, and that's allowed for interest rates to actually start rising, to start seeing a reduction of the balance sheet. So huge change on the macro scale of things, man. It's an exciting topic. And Tone, as well, I want to have you back on sometime soon in the near future. We'll see where crypto markets go. I know you're short on time and everything, but it was a pleasure getting to talk to you, man. It's great to catch up since back in March in Hong Kong. Just as an ending point real quick, is there anywhere that people should go to find out more about you? You've got your YouTube channel and your website.
Yeah, pretty much everything is just Tone Vays right now. So it's tonevays.com, Tone Vays YouTube, Tone Vays on Twitter, and the conferences, Understanding Bitcoin and Unconfiscatable. Looking to do more, but that's pretty much it. Got to get my Instagram game up, and maybe LinkedIn and Facebook. It's a lot.
It's too much to keep up with, man. I just started using Instagram. I've had a personal Instagram for a long time, but I just started a Data Dash one, and I'm just like, dude, I don't even want to I don't know what to post on here. I don't take photos of things. It doesn't fit with the crypto vibe of privacy. Like, you just don't like.
Well, I travel a lot. Like, I have all these travel pictures. I'm like, I gotta get the travel thing going. I gotta get an Instagram following. It's like so sad. I have like almost 200,000 on Twitter and less than 1,000 on Instagram.
Oh man. Well, man,
that's where all the young kids are.
Yeah, exactly. It's being on a variety of social media platforms. It's a security thing, because for example, like most of my audience is directly on YouTube. Then I have Twitter. But if YouTube shuts down crypto videos tomorrow, I need to find somewhere else to go to spread my message and to talk about crypto. So it's an interesting.
Oh yeah, no, I know who's going to be responsible for that. David Silver, who's on my law show. Like, I'm gonna.
Oh my god.
He's going to be in a lot of trouble if he's responsible for that. He's trying to get YouTube to. He's trying to like say that YouTube had responsibility in the BitConnect lawsuit.
Oh gosh.
So he's trying to hold YouTube accountable for all the BitConnect losses.
Yeah, exactly. That's YouTube supported BitConnect full-heartedly, I guess. Oh my god, man. Well, we'll see. Well, I hope it doesn't happen, but either way, hopefully we can at least stay around for another time where you come on, man, and stuff, and we can talk more. But Tone, thanks again for making the time, man. It was great catching up, and always good to get your perspective, man, in regards to crypto markets from someone who's been in the space for so long. Thanks for taking the time, man.
Awesome. Hey, thanks for having me on, man.
And that's going to be it for this episode of the Dashcast. Thanks so much, everyone, for tuning into this episode. And if you liked it, please give it a thumbs up down below, as well as giving a recommendation in the comments as to who you'd like to see on next. As always, I really appreciate your guys' feedback. I want to go ahead and give a real quick shout out to Tone for coming on to the Dashcast. It was not only great to catch up from when we last spoke in Hong Kong back earlier this year, but it's always awesome to get another person's perspective. As a trader, I always loved taking in the different viewpoints and the different things that people were watching in a variety of different markets. And Tone, being a macro trader trading in not only crypto but also traditional markets, seems like a perfect fit for an episode here on the channel. Our sponsor for this episode is the Dash Report. For those of you out there who enjoy what I do by covering multiple markets and getting a macro perspective on all the opportunities available, I feel you'll really like the Dash Report. Again, it's a great way to support the channel, but it's also a great way to get a good, clean perspective on a variety of markets, from crypto to stocks to commodities and currency markets, which I usually don't cover on the channel. So if you guys are interested, there will be a discount code linked down below for $129 for an annual subscription. I highly recommend you give it a chance, and would love to get your feedback on the newsletter.